Morning, ladies and gentlemen. This is Greg McCloskey. This is New York opening Forex commentary for Monday, March 12th, 2010. I hope everyone had a great weekend. What happened over the weekend, the significant news was a Greek aid package again from the EU. The finance ministers got together in a phone conference and said they would provide up to 40.5 billion U.S. Aid package of loans, which Greek could tap in if needed. Also, another 10 billion of euros were expected from the International Monetary Fund as well, and this sent the euro propelling higher. Then it started to come down a little bit after that, after there was some comments from a German spokesman who said the summit on the European leaders would be needed to activate aid for Greece. So this caused some sort of, or it caused a retracement of some of the moves that we saw over the weekend initially. But you can see here on the daily chart here for the euro versus US dollar, we actually gapped higher. The high on Friday came in at 134.94. The low this morning comes in at 135.86. Currently, the current price is trading at 135.93. We also broke above this trend line here. This came in around the 135.35-ish type area. This has been using these highs right here. So that's going to be a key support level going into today. It's also a parallel trend line to these lows down here. It's a significant level, and the market's probably going to use that level as support later on, or when the market, if the market does correct further. Taking a look at the hourly chart as we progress from one to the other, you can clearly see here the gap that we experienced over the weekend. I guess the hint maybe was that we closed at the high for the week on Friday. 1, 2, 3, 4. Actually, it wasn't the high for the week, but close to the high for the week, and then the market gapped its higher currently at the moment. So this 134.93 is going to fill that gap as we saw on the daily chart. However, there is initial support down at this 135.35-ish type area. That's the old trend line. So we'll put it in a horizontal line at 135.35. Well, we already have a 38.2% retrace from the last move to the upside there. So this is going to be a key level for two reasons on the downside here today. So look for support. I feel it continues to be further liquidation here in the early New York trading in the euro versus US dollar. What's the 5-minute chart telling us? The 5-minute chart is giving a little bit of a bearish signal here, at least from an intraday perspective. Obviously, we're lower than the gap opening here, lower than the first correction. So on the top side, what we're going to look for is resistance initially against this 135.08 level. That was the first low for the day. You can see here over the last hour, so the market has been able to stay below that level, and we also have the 200 bar moving average. Excuse me, that's 136.08. This is 136.11. If the market's going to stay bearish, we're going to have to stay below these lines. Normally what we see is if the trigger is going through the blue line, that's our 100 bar moving average. This is a confirming moving average. We got to stay below the confirming moving average in order to keep the momentum to the downside on an intraday bearish basis. If we cannot stay below this line, then the market would probably head up and go and test this 100 bar moving average at 136.34. If we get above that level, then the bias back to the upside continues in its earnest. But right off, the bias would turn a little bit to the upside if we move above 136. This green line at 136.10 currently at the moment. Let's transition to the sterling versus U.S. dollar, and this also gapped higher here over the weekend. The high on Friday came in at the 153. Let me see here, 153.90 level, and the low here today has come in at 153.99. So we have a little bit of a gap there that we do have to fill still from the highs to the lows today. So we'll put a line in there around the 90 level to remind us that that is what the market usually does when it does have a gap. You can see here that the sterling has had a up and down trading range today. But if you take a look at the longer term here, we did break out on Friday. We had to move up, consolidation, and then we broke out on Thursday and continued that to Friday. So this is a nice continuation of the trend here that we would have expected to see. The 5-minute chart is very similar to the euro dollar chart in that we are currently below the 200 bar moving average of 154.28. We're going to have to remain below that moving average line in order to keep the bearish bias. If we move above it a little bit here, we probably may go up and test the 100 bar moving average just like we did at this point right here. Right now, the market's in a pretty big transition phase, but and most of the activity here today has been sideways for the sterling versus the U.S. dollar. So we'll be watching that closely. Let's go to the Swiss franc and what normally they're buying the Swiss franc on the news here, selling dollar buying the Swiss franc as well. So we gapped lower on that news. The market moved below the 61.8% retracement of this last move to the upside. Now we're seeing the correction back to the upside here. Just like in the other currency pairs, the euro and the sterling, and so we are moving back toward the 38.2% retracement of the day's range of 106.22. We also have the 200-hour moving average, which we surged. We plunged through it, 106.40 on the top side as resistance. The low from Friday on the hourly chart that we had to fill goes down to 106.54. So we'll be watching that gap. We'll put a line in our chart at that level as well. We also have the 30. Or we'll take this line out here. Actually, this is the old Fibonacci. We're more concerned about that, but it's a 50% retracement of this move down as well, so that would be a level of significance here. Taking a look at the 5-minute chart in this currency pair, we do, just like the other ones, we're just at the 100 and 200 bar moving average. We got to stay above the 105.86 in order to keep the bullish intraday bias here. This is at 105.95. These two moving averages converging with the price. Perhaps we'll get some fireworks here in the New York opening here for the dollar versus Swiss. Dollar versus yen has been helped to the upside. There was also some comments from the finance minister. He hints at weaker yen. It specifically suggested on Monday he favors a weaker yen and reiterated he would not ask the Bank of Japan to increase its debt purchases, indicating government pressure on central bank to ease policy is driven more by currency. Was the comments that we saw on the Newswire here this morning. This has helped the dollar yen, weaker dollar, stronger dollar yen, weaker yen, and we're seeing the market above the 100-hour moving average here. This 100-hour moving average comes in at 93.50. Current price 93.50. We're 53. We're in between our goalposts. We got to get above 93.70 to confirm the move to the upside. If we were able to get above that 70 level, we should see increased moves to the upside. If we can't, if we fail up here, fail to take out this upside at 73, we could see the market start to move down lower. We do have support down here at the 14 level. We are looking at that on Friday from these lows. That would be our support level on the downside. Also, today we had a couple hourly bars. We paused a little at the 93.35, so that's what we'll be looking on at for the dollar versus yen. Looking at the 5-minute chart, this has been a nice surge to the upside here for the dollar versus yen, breaking through the 200, coming down, testing the 200, moving higher off of that level. So that's how we take a look at the market this morning. Good luck with your trading, and we'll speak to you as the day progresses. This is Greg Mikulowski from FXDD.